Hello everyone and welcome to this follow-up video. Um, Now, following the announcement on Friday where the IMF called for a new Bretton Woods, which got a lot of attention, especially if you've been following Bitcoin and crypto, I had an invite to a seminar today, Monday, the 19th of October, also from the IMF, and it was called Cross-Border Payments, A Vision for the Future. And I found it very interesting. I actually registered for the seminar and decided to attend. And the reason is, well, obviously this would have something to do with digital payments across borders, CDBCs, central bank digital currencies. And I was very interested to see if they would actually talk about cryptocurrencies or just CDBCs. So let's have a look. So this is the seminar. There's no replay that I could see, but uh, there's the IMF Managing Director, Kristalina Georgieva. She made the announcement calling for a new Bretton Woods in a video on Friday. And we had four other central bank heads, the Saudi head, the governor of the Bank of Mexico, the chair of the Fed, Jerome Powell. Now, you would know Jerome Powell if you've been following the Fed, if you've been in finance and international macroeconomics for any length of time. And we also had a lady from Malaysia, I think basically the chairman of the Central Bank of Malaysia. So I'll go through it very quickly on a couple of things. So they started off talking about some very good things. Concern for the poorest people in the world, and how we now have the technology to do so. However, it's very interesting. They never once mentioned the word blockchain or cryptocurrency or Bitcoin. They talk about CBDCs and they talk about CDBCs using digital ledger technology. It's almost like they go out of their way to not talk about blockchain. And they didn't name any technology partners except for one, which I'll touch upon in a minute, which was Libra, which was fairly predictable. So some of the points were, we have a slow and costly payment system currently, and we know that. And it's also inaccessible to people in developing countries, poor countries who are unbanked. Now, I'll tell you something very interesting. In my IT career, I do a lot of work with the banks deploying enterprise grade systems. And there's a phrase that they have in the banking world, bank the unbanked. And if you're coming from the crypto world, that's swapped around, unbank the banked. So it's very interesting, but they still talk about those who are unbanked. Remittances make a large portion of these cross-border payments, people, migrant workers, going to richer countries and sending money back home. And they admit that the future is digital. They say that, which is good. However, the lady Kristalina Georgieva, the IMF head, said, and she said it openly, we don't want to wake up one day and see that the dollar isn't the global reserve currency anymore. So it's very interesting that they say that. Is there a little bit of fear there? I don't know, but I'll come back to that in a minute, right? So some of the benefits that they mention for going digital, the future is digital. They admit that it's going to be easier to help people with remittances. It's going to be faster than what we have today. They focused a lot on the risks. You heard this coming up constantly. Widespread use of digital money could make it harder to implement monetary policy. Quantitative easing, control, liquidity, all of those things. And they would prefer solutions to benefit all countries and all people. So then we had Jerome Powell, head of the Fed, speak first. And he mentioned that they've done a few POCs, if we could call it, or trials. They have not made a decision to issue a central bank digital currency yet. He feels they need more consultation. The Fed is wondering how a CDBC could improve, in his words, an already robust payment system. We have a highly banked population in the US and a highly robust banking system. what benefit would CDBCs bring? His words, right?
Given the dollar's important role globally, it's essential that we remain on the frontier of research and policy development. The dollar is the world's principal reserve currency, and there continues to be large global demand for Federal Reserve notes. There's about $2 trillion worth of Federal Reserve notes in circulation, and we estimate that somewhere close to half of that value in notes is held outside of the United States. Use of and trust in the dollar comes from the reliable rule of law, strong and transparent institutions, deep financial markets, and an open capital account. A healthy and efficient payment system demands these features, which reach far beyond the merely technological.
The Saudi central bank governor spoke. Apparently, they've done a pilot with banks in the UAE. 6 commercial banks participated, captured insights of potential use cases done on distributed ledger. They don't say blockchain. Verdict: the technology was viable for cross-border payments. And that's pretty much what he said. Then the Mexico central bank governor, which is this chap here, and he spoke very, very quickly, and he said a few things very interesting, right? When a move to CDBCs happen, it will always be a national decision. The central banks will have absolute control and the technology to enforce that control. They're not going to give up any control. And he said, according to my notes, he liked the efficiency gains, but he's really worried about the threats to macro financial stability. Okay. Then we had Jerome Powell again, and a couple of other things. The second time he spoke, he really went into the risks. He said the biggest problems for him are making sure that a CDBC is protected from cyber attacks, hacking, and fraud. Once again, how it would affect stability and how it could prevent illicit activity. Now, we've always had this comment on illicit activity from the first days of Bitcoin and cryptocurrencies. Okay. He also mentioned that and this is a number that he said, $2 trillion of Fed Reserve notes in circulation, and they are committed to the soundness of the dollar. Okay. Then there was something that was really a little bit concerning to me. Now, this is where it gets interesting, and I'll bring it back to crypto from this point on. The panel then stressed the need for a digital ID to be linked to CDBCs. And as I said, they don't do the replay. So you either attend the seminar, there's no replay of it that I can see. But look here, this is the Saudi governor, and this was a grab from the virtual conference. And he says here, a key hurdle to financial inclusion and better cross-border payments is reliable and trusted identity system. This poses a challenge to emerging market countries. So the one valid point they make, and there's a lot of valid points that they make, is that an emerging market country may not have the money or capability to implement the infrastructure, not only for the CBDC, but for the digital identity system. This is bad because they mention Libra so many times. And can you imagine if then they feel that, well, the best thing to do is developing countries just go and adopt Libra. Facebook would be in total control. I don't want to live in a world where central banks around the globe have digital currencies and it's somehow tied to Libra. Your Facebook login is your digital identity that they speak of here. I'm not liking that at all. That doesn't sound great. And then he went into KYC. They kept speaking about KYC as well. If you're a crypto guy, you know KYC. The governments want it, the central banks want it, people generally are saying they don't want it. Okay, basically, I think that they're hinting strongly that they're doing a lot of research into central bank digital currencies. The feeling I got was, number one, they're in no rush to implement it. They still talk a lot about the risks, which they highlighted as disrupting global macroeconomic stability by bringing this in. Hacking and security, the need for a digital ID, which they feel has to be strongly linked to a CDBC. Now, from my perspective, imagine how this would work, right? It's very interesting. They could leave banks out of this. The banks wouldn't be happy, so I don't think they will. I mean, if it's a technology platform that a central bank is issuing currency on, they could, release an app. But I don't think they would do this without the bank. So I think you would still have your bank account, and maybe you would have an app for your bank like you do today, and that's where you would transact in the CDBC. But I'm more worried about what could happen on the policy side, not on the consumer side. As some commentators have mentioned, this would allow them to just change the way they do policy, and the so-called efficiency of a digital platform could allow them to do a lot more things. Inflation, tax collection, right? Think about it. They could print more digital currency, and the value of your digital currency could drop automatically. Not in a speculative bubble where you have to wait for prices to rise. Imagine if you have 100 of the digital dollars and you have 98. The wallet is updated automatically. Just thinking out loud here, right? That's inflation. I don't think, and this is really the gist of the video, I don't think there's any worries for crypto here. They're not talking about crypto. There's no partnership where they're even thinking about Bitcoin or mentioning it. They're brushing it aside. They see Bitcoin and Ethereum as a threat. Remember, this would be central bank programmable money. We talk about Ethereum as programmable money, and they've latched on to that, and they're now talking about central bank programmable money. Okay. My thoughts are, though, we see companies like MicroStrategy and Square the other day using Bitcoin as a hedge against inflation, putting it on the asset books. I don't think central banks will do that anytime soon because they're busy on this project. They're taking guidance from the IMF. Their mindset, according to what I'm seeing here, is, well, that's fine, but we're looking at a digital dollar or currency, a CDBC. So it will take more time. Does that mean they're never going to recognize Bitcoin as a global reserve currency? I think if it might be happening already, where certain central banks are stockpiling Bitcoin. But consider this, even if they never publicly admit it, it would just take one central bank to break free from all of this, and the rest would follow. It would take one central bank to say, we're holding Bitcoin. We see it as an asset of value, a store of value, and that would open the floodgates. But right now, nothing really to recognize the crypto world, and even with CDBCs, more concerns than anything else. So that was that. That was a very interesting seminar, which I sat through, and I guess you don't have to. Let's see how it goes. Let's see what happens. So I'll see you in my next video. Hope you enjoyed that.